Well, we apologize for that technical connection. However, as I was mentioning, the Asian market struggling to find gains as investors turned negative. Even though we had a positive finish stateside, over in Japan, we did see markets return after a holiday that took place yesterday. And even though the markets returned, we did see the Nikkei drop 0.8%. Shares in mainland China also in negative territory. Looking at what's happening on the Shanghai Composite, down 0.8%, and the Shenzhen component of it down 0.1%. And over at the markets in Hong Kong, the Hang Seng Index trading down 1.9%. Looking at what's happening on the European side of things, stocks fell slightly, even though on that particular side of the market, investors are waiting for inflation data, the economic numbers coming through, as well as a flurry of corporate earnings. But when you look at what was happening on the US stock futures, those ones slipped a little bit earlier, even though investors are poring over some of the results coming through, especially those impressive numbers coming from Amazon. And to talk to us a little bit more about how that entire picture is playing out from a local perspective, we are joined by Warwick Lucas from Galileo Capital. Warwick, thank you so much for your time this afternoon.
Pleasure, and thank you very much. So, quite a big week.
Let's talk about it, the week that was.
We certainly had some big moves locally in terms of political developments. We've got state wage negotiations clearly warming up to be a very robust affair, and then the issue of cadre deployment came to the fore in the Zondo Commission. Internationally, we saw that earnings continued to do well. Of course, we're in the early part of the announcement season, the companies that do well tend to rush to tell everyone. We've seen the likes of Microsoft and Amazon and Google all looking very chippy. Some not so well. Honeywell, American Express, and Apple also indicating they'll be cutting some AirPod production. So yes, a interesting week that was.
So, we have US GDP numbers that came in yesterday up just over 6% on an annualized basis, as well as the initial jobless claims. And when you look at what the Fed said on Wednesday, you kind of get the sense that it's ruled by monetary doves. At this particular point, are you wondering whether the hawks are going to awaken from their slumber?
I think they've basically adopted a view of as long as it takes and then some. We're not in a typical cycle where you have growth and then recession. It's been earthquake and now recovery. And I think that's the kind of thinking that's dominating the Fed. So the question going forward right now is, do we see growth? Well, we saw from the GDP numbers, yes, we did. Do we continue to see some good recovery type growth? Because the sooner recovery comes through, the sooner one goes to some kind of normalization. And then at the tail end of that is, well, how tricky will normalization be? And that, of course, is the multi-million-dollar question. But I think we're quite some time away from that. We're fairly early into the recovery. Only a year, obviously, from the very hard smash of the earthquake in March 2020.
So yesterday we had production numbers come out of Sasol. What do you make of Sasol's trajectory so far? Your thoughts?
Okay, so they also popped out a trading update, although it was a fairly nondescript trading update because they're comparing numbers this year with last year's loss and fall over basically in the quarter four of their last year. This year, production numbers look quite positive. They're moderately lower than last year, but of course most of last year was normal until the hideous quarter four. And I think at this stage we're looking at that recovery coming through. To put it in context, we're looking on consensus at something like in the order of 30 Rand a share in earnings, but no dividend. The most important point was with Sasol, it had a big debt. It had to sell off some divisions to one, raise money, and two, reduce exposures. And so it's been a year of consolidation, and will probably be somewhat a year of consolidation in the year ahead as well. So all of that, under the circumstances, is a fairly positive trajectory.
All right, so there's so much happening in the world right now. Earlier this week, we were having a conversation about what the FOMC meeting means for the dollar. Let's talk about all of these global developments and what they mean for the rand. How's the rand been holding up over the past week or so?
Okay, so the rand's had a reasonably solid week, continuing a pattern of the last month. Compared to commodities, if anything, the rand's been somewhat muted. Typically, the rand follows commodity price growth very strongly. And in fact, that has been strong in the last month, and we haven't seen quite as much coming through in the rand itself. But that's okay. I think we have some local policy and political issues to sort out, and so for the time being, our exporters will continue to benefit from earnings recovery from those commodity prices, and that will hopefully flow through to the fiscus and basically help the country's debt position out of what is currently a rather tight spot.
All right, Warwick, let's leave it there. Thank you so much for your time. We will continue to follow developments in the US, look at some of those earnings numbers. So, as well as study what is happening in India. At this particular point, we have India being the epicenter of COVID-19, and all investors are asking what this means for the world recovery. However, we're going to take a break from me.